Good morning.
Good morning.
Good
Welcome
morning.
Good
is
morning.
today Wednesday? Today is
Yeah,
Wednesday.
today
Wednesday.
is
Yeah.
Wednesday.
Wow.
Yep.
You eliminate a day, you add a day to your weekend like
Good
Monday
morning,
we did?
everybody.
It's
Oh, it's
hump
fine.
day.
It's hump day.
Yeah,
Whoop,
it's
whoop.
hump day. I love hump day. It's hump day. All right, let's hump it over and see what's going on in the markets today. All right, well, yesterday was a down day. S&P down 0.7, NASDAQ down 0.8%, Dow Jones down 0.6%. We had the ISM manufacturing PMI come out and lowered expectations. It's kind of signaled there's contraction in the manufacturing sector, according to this report, along with rising yields. And so we saw a lot of investors take profits and get out. And we also had over the weekend, some federal judge said that all the tariffs are illegal, blah, blah, blah. So now that's going to have to go to the Supreme Court. I don't know what's going to happen, but the Supreme Court's been siding with the executive branch on things that are underneath the executive branch. It's called, with regard to who he fires and hires and kind of tariffs and things that he puts on countries. So we'll see what happens, but that should become quick, I would imagine. Today we got the JOLTS report, which is a job openings report. It's a big jobs week. By the end of the week, we'll have the non-farm payroll, which was a roller coaster. Last month when they revised down 58,000 jobs from the previous 2 months, and we only had 72,000 jobs gained. So we'll see. That's Friday. I think a lot of the markets sideways, downwards. We'll probably be waiting for Friday. So again, this was a week that I said I'm not too enthused about swing trading into this market. We did hit a few, and I'll show you what we hit because the market. Right after we got done with our meeting, the market opened, like we said, lots of volatility, went down almost 600 points, the Dow, then came back and, it closed a little bit lower than that or higher than that. So anyway, earnings, we got Salesforce, HPE, Hewlett Packard Enterprises, Dollar Tree, and Macy's. So we'll get some more retail, a couple more with tech with HPE, and software with CRM. And let's get going. Today we look like flattish. Okay, Google is up, and so is Apple. There was a judge came out and said that they can keep their Chrome, and also it said that the Apple can continue to load Google search on its iPhone. So we'll take a look at those charts where you can see Apple will be up in the pre-market. Macy's beat estimates, looks like, and the 30-year yield top 5% briefly. Okay, so even with cuts of talks of the rate cut for the Fed, which is only what they lend each other banks overnight, we're still seeing the rates going up on the bond market, which is the actual market. We'll take a look at what happened yesterday, and this is just our classic swing trade spreadsheet. And this is the swing trade. We're still in Berkshire. Berkshire went up, hit a Bollinger Band, came back down, but we're still up 4% or 2.94%. Sorry. In Berkshire, we're watching that as on the 200-day moving average. If you're an investor, that's a good place from a Paul Tudor Jones point of view. He's proven that out to start investing. We also got into Allegiant, which was A. And Devon, we're up about a point on A and about 2 points on Devon. Energy went up yesterday. And then Palo Alto Networks about 1.71. Didn't hit anything on Packaging Core, BXP, or JPM. In fact, JPM had a intermediate resistance level come on, so I'm not even interested in JPM anymore. And I'll show you some of the sectors and what's happening in the sectors. When we come down to our under the 200, the ones that I put in on the list, none of them hit. The tail list, we looked at a couple from Kerry's, Confluent, and TG Therapeutics. And TG Therapeutics was about the only one that moved up from our price when we put it on the list. So again, these we didn't get in. We're still in from last week. We were up 11%. It dropped down a little bit, 9.2. But I'll show you the charts and why we're still in. Okay, let's go to the charts, the aforementioned charts. And again, when we look at charts, I mean, I'm looking at it from swing trading point of view, but I'm also looking at it with Trent for a long-term point of view. And that's why I always bring up, the 200-day moving average, which is right here, which is what we talked about, at nauseum about Paul Tudor Jones, and that's how he got out before the great financial crisis. And it's a very good line in the sand for those of you that don't want to trade, which I understand. I have accounts also that I don't trade, that I just a long term. This is a good indicator, but just because you don't trade doesn't mean you can't learn off of technical analysis. Technical analysis is about, if you're thinking about an investment, where should I get in? And if you know technical analysis, you might look at a chart and say, well, I'm going to wait for that to come down because it looks at, it's at its high, it's topping off. All my oscillators are telling me, to get out, like in SPY here. Yesterday's SPY, came down below the 20. Okay, the 20 has been a pretty good level of support. Okay, on the SPY ETF. Today we're going to open up right about at the 9. This is a 9-day. I use the day chart on swing trades. You can go out to the week or the month and do the same thing on a longer term. You just trade monthly or you trade weekly. Okay, so this isn't about just swing trading. Trent and I were just talking about it. It's about learning a skill that can help you in investments too. And that's why Trent has is intermediate trading level and the way he looks at things also. So we try to give you a blend, but we still use technical analysis along with some fundamentals on these thoughts. So the S&P, you can see the oscillators are down on the S&P. We're running right along resistance. Okay, we have been for a while, and then we drop down. Okay, we drop down to a level we've seen before. Today it looks like we're going to be up a little bit, but again, we'll see what happens on the S&P. The Dow, again, we use ETFs to kind of gauge what we're looking at. Again, right along resistance. Okay, a daily chart. We drop down below the 9. Okay, so if you were swing trading this, you get a full candle down, see the oscillators dropping. That's where you'd probably get out, on a swing trade. You get in, get out. On a long-term investment, you might have used the 200. We'll go back, and we'll look at a different perspective. So right in here, we were playing along the 200, and it finally broke out. Okay, so if you were a Paul Tudor Jones person, you would have gotten in probably at the end of June. Okay, so you're not really swing trading, and you would have gotten in about $430.79. You're still above it. You've got the 50, which is the intermediate moving average. You're still in it, at 453.61. Okay, so you're not trading all the time, but you can see this is one line. You're moving, you get out, you get back in. Okay, these kind of save you as an investor, this line, as a drop all the way down into this area. But it did come back. But again, we don't know if this is going to be the drop or it's going to come back, or we're in a great financial crisis again. We've got a lot of stuff going on, especially with debt in this country and a lot of new administration that keeps everyone on their toes on a daily basis. So anyway, enough of that. Let's look at gold. Oops. Gold's been kind of on a run, and that has to do with the economy and the devaluing of the dollar. Oops, sorry, put the wrong symbol in. Spelled it out. So gold, look at that. I mean, gold has, we've been in this sideways motion. You see right along the 50, right along the 9, and then we start seeing the 9 and the 20 take off here a little bit. We're still above the 200, so there's your investable line. Your trading line, you're moving up. You got some sell orders up here at 330.84. So we're seeing gold move. We're also seeing silver move. And silver, this is the iShares Silvers Trust. Okay. Usually you see money move to gold and silver when it's, flight to safety. People are looking for solid money. We're also seeing that into Bitcoin now, finally. And Bitcoin is in the crypto market. It's a new market. Only 16 years old, but you're seeing Bitcoin, you're seeing Ethereum take off. But today, we talked about yesterday, getting above the 110 level. We've played in this before, and today we're at 111.6, so we're starting to move above the 9. We talked about it going sideways along the resistance here, or support and resistance at 110. Now we're above. Now we're going to come up. We're going to test the 20-day moving average on Bitcoin. See if we can keep this trend going. You come down and say, well, what's happening? The MACD is showing a turnaround. We've already seen it on the stochastic. And if we just go look at the proxy MicroStrategy, which is a Bitcoin treasury company, you see the same kind of turn. This came down right to our intermediate support level. Okay, and you can use this on longer term charts also for investing. It's come down sideways. We waited for the 9 to come down. We see this all the time. We are below the 200, and now we've made a little bit of a turn. We haven't crossed back over. We'll see where we open today. Looks like we're going to open just a little bit above where we closed, and see if this starts to turn also. You got sell orders right below the 200. We can get this back moving up and above the 200. Then you're back in an investable kind of market, and you see if it moves up. The oscillators are looking like they're going to turn, but they're not there yet. We look at Ethereum. Since Ethereum with Tom Lee and his company, Ethereum's kind of got this wedge. You can kind of see this wedge going here and here. And at some point, this wedge, it's going to break out one way or the other on price action. Ethereum's above the 200. It's also above the 50. So we're just kind of consolidating. We'll see what happens. But the oscillators are telling me right now, it's on a negative side of the oscillators, which we see here. It shouldn't be any surprise. We'll see which way it pops. Right now we're flirting with the 20 on Ethereum. If you look at the Ethereum ETF, which is the Fidelity, same thing, kind of sideways to down. We've got some resistance and some sell orders here on Ethereum, and the oscillators look the same. So, downward move. So on a swing trade, you're out. Maybe on an investment, you got in back here. Here's your 200. You got in at $27.69, and here we are sitting at 42.63. So one line, one trade. Until it comes back down. You see the 200s moving up. So I mean, even if you came down and you hit the 200, you're still above where you got in at, basically. But again, there's different ways to use technical analysis for both investing long term, which I use them for long term, and for short term. Okay, let's go to NVIDIA. NVIDIA, you see, yesterday we went and we closed under the 50. Today we're going to close right at or above, or open right at or above the 50. The oscillator's just tanked, since earnings. So again, this nice long run up would have been a nice swing trade. You get out at the intermediate support level if you're an investor. Okay, here's your 200. I'm going to go back 2 years on NVIDIA. Okay, so you see, as an investor, way back here, you're in the video. Let's just say right here, 49.52, and you're above this 200, and then you cross the 200 here. Okay, at 170.78. So you went from 40 some dollars to 170. You got out in January of 2025, where you got in. I'm just going to say January 2024. So a whole year, okay, of investable. You got out, you missed all this crap, you got back in here, and then you're still riding it. Okay. The reason you get out, because you say, well, look, it went back up, but it might not have. Okay. You might have been in like a great financial crisis kind of mode, and this just kept going down and it never got back up. In this case, it did, but this is opportunity cost. You could have taken this money from this time into this time, put it into a 30-day treasury at 4.3%. And made more than this loss and then got back in. So you keep your money working when it's below that line, and you move it. That's what the professionals do. And that's what we try to look at here. With Trent was a financial advisor and I was in the operations of a major brokerage. And these are the things that we've seen and what we've learned. Not that we're all experts on it, not that this is financial advice, but I've seen a lot of people get screwed, time in the market and stay in and keep buying. Meanwhile, the institutions are pulling the rug on you, and they're getting out, taking your money, waiting for the market to dump. It dumps, you finally get frustrated, you dump at a 20-30% loss, they buy back in, it goes up. I've seen it 1,000 times. That's why we try to use technicals along with fundamentals like Kerry's tell sheet to help out and try to learn both sides of this market. Meta. Okay, these are just all kind of done the same thing yesterday. Below the 50 again. We're going to open up a little bit above on Meta. Look at Palantir. A lot of you guys like Palantir. Again, we moved right along resistance here, got above it. Now we're right along resistance again. We're squeezed right here between resistance and the 50. We'll see which way it goes, but you're still over the 200. The oscillators still don't look good on Palantir either. So I'm going to go over to our watch list. We've been in Berkshire, and this is one of those that crossed the 200-day simple moving average. So again, we waited, came back down, bounced. That's when I put it on the list for an investable or a swing trade. You see, we followed the Bollinger Band up. Yesterday with yesterday's market, came back down, stayed in. Okay, because I'm going to see if we can play this one as an investment. See how it goes. I'll tell you where I would have gotten out. On a swing trade, probably would have put in a sell right at this level. You can see right here's where we topped out. Right here's where we wicked down. That would have been a good area. Would have kept your profit from here. You're still over the 200 on a swing trade. Didn't hit. So still in. We're still up about 3%. Healthcare stock. Again, this one, like with the market, we told you in the market yesterday, it's Tuesday after a 3-day weekend. There's lots of orders in. Got a lot of news out there. The market went nuts, went down 500-600 points, then bounced back up to a loss. But you see what happened with A. So with A, I'm like, I'm going to play the 200 just like we did with Berkshire. And so you come up, we opened here, we wicked way down. I said, well, if it comes back up and gets above the 200, that's a good line of support, and it did, and that's where I put in. And so we're up a little bit on A, about 1%. See if it can continue to ride up this line here on the Bollinger Band. We're above the 200, above the 9, we're above the 20, above the 50. Oscillators still look good, so we're up a little bit on that one. It's one of those that you wait, and it comes back to you. You see that a lot, DVN. Now, these oil stocks are just, oil stocks are very volatile, depending on what the news is, what ship gets blown up, what inventory report comes out. We've got more oil than we need. We don't have enough oil. It can just dump you. So on this one actually came down. You can look, we put in a buy level. I tried to do lower buy levels because the market was down. And right along this line, you can see, we had some support and resistance sideways right here. So put it in, hit right there, pop back up. Now, of course, it could still go down. You've got support here. And then you got to be ready with your, what percent are you willing to go and take a loss? I'm at 2% on the downside, but this one went up. Now you have the ability to come in here and put a stop limit or a trailing stop. I would come back and I'd look at this level right here and say, if it comes back in, I save my profit. And that's what you do on a swing trade. Okay. If you're investing in this and you're using the 200, you might have got in at this level here. Okay, you're still above the 200. You got the 20, the 9 moving up. You got the 50 below the 200, but moving up, and the oscillator's going. So again, you can use this both ways. So in on Devon up 2%. PNW was another one. Again, one of these that came down. I just played the 200s yesterday. I'm like, this market's going to be a little crazy. Let's play the 200s, and we'll see if this holds. Again, now you're up. So if you get in here, you're up this much. Come back. Maybe you put it at the 50, as your sell limits at the 50. Maybe you come down a little below. But unless this thing wicks down this morning, you should be you'd be in the profit. Okay, you're not going to lose money if you put in a stop down here. You might gain, 0.5%, third of a percent, but still in one day, that's what we're looking for. But right now, we're doing okay. The other ones we didn't get in, PKG. Just didn't hit. I was looking to get in lower right in this level if I was going to hit. It just didn't come down and hit. But, still tradable on PKG. Watch your oscillators, and it popped back up like the market did yesterday. Now, it's below where it was on Friday. But again, you can see the market, you could have hit. But again, it wouldn't have hit mine because I'd have been down here right above support because I didn't know how far that market's down. So you win some, you lose some. BXP. Where is BXP? Okay, BXP, same kind of thing. I kind of put a line here where I was thinking about it right here on this. Here I was trying to get in above the 200, and just didn't hit. So again, another one that kind of came sideways. Still tradable. You can still have it on your list. You might be able to get in. today's market goes up, you still have good trends up. You're above the 50. You got the 9 going to cross, or above the 200, the 9 going to cross the 200. Already crossed the 50. The 20s crossed the 50. You know, a little bit of sideways, but it's pulled inside the Bollinger, which we've been at for a couple of days. So, you know, you don't have to be in everything. If I put a list out, it's just a list for you to look at, put your trading plan to work. Don't get impatient. Don't chase price action. If you miss it and it keeps going up, you always feel bad. But sometimes if you chase it up and you get it and then it rug pulls you and you're down 3% by the end of the day, you don't feel as good. So again, patience is what we're trying to teach. Patience and system and process. If you do that, your chance of a good trade, a good investment increase substantially. And then I'm going to look at the other 200, and we didn't get into anything there. We have VFC that's left over from last week, where here's our cost basis here. Rode the Bollinger up outside 3-4 days, came back in. You still got a good profit. Here's our cost basis, still above the 9. So you could set, you know, if you wanted a sell order at this point right here, you could sell it right at the 9. But you know, it has bounced off the 9 before, but you're up. Okay, we're up over 9% still. Last Friday we were up 11, came back down. But again, we still have room to roll. You're in a profitable trade. You know, let it run until it doesn't, you know. But again, always protect your downside on trades or investments. And again, this is under the 200. The others didn't hit. Okay, we had 6 others on the list, didn't hit. I'm just going to go through a few. LKQ, you know, I was looking to get in at this level right where we hit back in here, but it didn't hit. So, you know, you look, try to get in. So, you know, it's Wednesday already. I'm into some. I'm not sure I want to add any more because I do not want 10, 12, 20 positions in a short week on a short swing trade schedule. I don't have time to sit there and watch all these. I like them. You get 1 or 2 good trades a week, and you can make, you know, 4 or 5% on those trades. You know, take that times 52 weeks. That's a pretty good payday. A few others, you know, we're still looking at, this is an ETF. Gold has done well. We looked at some of those yesterday. Gold miners, this is the gold miner ETF. When I look at some of the others we looked at energy. XLE is the energy SP. And I look at right now, we've got intermediate resistance has now hit on energy. This tells me, for me, if I was swing trading this is where I'd get out. So, you know, it's not like it couldn't spike up, hit a little bit into these sell orders up here. But to me, I'm seeing a lot of signals that we didn't see yesterday. You know, we talked about energy and financials being the runners. Now all of a sudden I'm seeing intermediate resistance come on some of these. It's telling me, okay, you know, slow down the wagon here, slow down the horse, because we're starting to see a little bit of resistance above. And here's XLB. This is our material sector. This has been doing well too. Come up, we've gone sideways, resistance came on, we dropped back down. Again, we hit this all the time. This is when I get out on a swing trade. And this is when I could get out on an investment too, depending on where I got in. You know, this here, we're below, above the 200, still investable. Okay, because if you're just using the 200, you're above it. But the 200 is heading down. So if you came back down and hit the 200 today, you would probably lose money. The whole game is to make money, to preserve your capital, to manage your risk. And with that, I'm going to go on to Trent because I've been talking too long. He's got a brand new Morning Edge background. Look at that.
Look at that. It's so cool what you can do with like ChatGPT. So this is a picture I took. I uploaded it to ChatGPT and I said I wanted to do this, and this, posterize it, blah blah blah, all these fun artistic words, and it creates those kind of things. So that's a side note. Anyhow, I wanted to address this month of September, and give you some historical context of what we are in the midst of. And so I went on to Grok. I use Grok pretty regularly. I spend the $30 a month to get it to the second level. I'm not at the point of wanting to spend 350 for the top level yet, but someday soon. So this is on average. Let me read this to you. The average return for the S&P 500 in September since 1928 is approximately negative 1.2%. This figure is based on historical analysis, which consistent consistently identified September as the weakest month for the index for a negative returns occurring about 55% of the time. We as human beings repeat ourselves behaviorally. And the stock market really is no different. And so as we enter times like September, we need to look at historical, go back and look at time and look at historical performance and say to ourselves, what variables support that 55% of the time the S&P 500 is down in the month of September since 1928? And I'm going to give you a couple. Number one, if I look at the percentage of stocks above the 20, the 50, and the 200-day moving average right now, above the 200, 58% of stocks are above that. Above the 50, 60% of stocks are above the 50-day moving average, and 62% of stocks are over the 20-day moving average. So we're at historical levels when we look at the averages. We're here, you go back into 24, we're over 60% of stocks or over 50% of stocks are over the 200. Let's just use that as our baseline. The 200 is from a long-term perspective. Yet those runs run for a while. In this case, we ran from was in November of 23 to again till February 27th of 25 of this year of February, and eventually it retreats. So when I look at this, I go, okay, I'm at the top of the heap right now. Historically, going back, say 2-3 years, I'm at the top of the heap. That's variable number one I need to consider. Number two is the VIX. Historically, when I look at the VIX, when markets are going up, so go back to 23, the VIX goes down below 19, and that's your investable bucket. That's the bucket where you have low volatility, dealer gamma is suppressed, and it allows markets to or stocks to float higher. And that's what we saw. We have seen historically. But now we get into times like August of 24, where the VIX jumped up. We've got more out, since August of 24, more more times above the 19 line or in the chop bucket. And now we're in this place where, again, historically, we're in the lowest point of the VIX, and we're at the highest point of stocks above the 200. So we got this opposite correlation, okay? When we were back here in April, and the VIX was up here in the nosebleed section of got as high as say 60 on the VIX, and the S&P was down here. You go back a little here. Was that right there? That's August 25. Oh, even further. Holy cow. What am I thinking? Right here. This is April. The VIX is up here. S&P is down here. We rotated. Okay. Keep in mind, the majority of trades, and I know I beat this drum all the time, the majority of trades are made by systematic, vol-controlled CTA funds. 80+% of all trades made today will be by a computer algorithm driven by mathematics, not fundamentals, not about headlines, not about how pretty a relationship Putin and Trump have. It's about mathematics. And what we're seeing today, in my opinion, is that the two variables, VIX and the S&P, are oppositely correlated. S&P has had all-time highs, the VIX has historical lows, and we have a system that's based on risk on, risk off, and then throw in September being 55% of the time it's down, we have to pay attention here. We have to risk manage. This S&P, if you look at this, blow this up a little bit, has basically been going sideways since the 12th of August. Sideways, sideways. Yesterday, it dropped, the S&P dropped 0.69 of a percent. We came down to this 63.50. We were about 10 points off that. That's where the options market is put in a floor. That's where they're pricing in, you're buying hedges against that. 6,400 is that green line there. We closed 15 points above it. That is sort of the second tier level. And then our resistance up here at 6,500. This is where the options market is pricing in its risk. Yesterday, we went from a dealer gamma, and dealers are market makers. These are the guys, when you buy a stock, they make a market for it. They match up your buy with a sell. Those are those guys. Well, they keep a book of business and they have to hedge that book of business. And one of the key numbers is called gamma. And gamma yesterday was very positive. Guess where it is today? Very neutral. When we were in January, we were positive gamma. We got into late February, we became neutral mid-February, and then we went negative gamma. What happened after into March? Markets start to sell off. Gamma got real negative right down here in April. Right here. Negative gamma. And then it started switching because the systematic funds came in. They were risk off. Understand, the dealers are making these decisions based on the majority of where the movement of money is going. And when systematic funds are so risk on and they see volatility start to move higher or change direction, they readjust. We are now in that position where dealers are saying positive gamma all last week to neutral gamma this week. And they're going, okay, something's up. These these systematic funds, they're running out of gas because they've spent all their money since April. They have no more money to deploy to push this market higher. And if they do deploy any money, it's going to be the last thing, and it's basically a rug pull move. They're going to push it higher, push it back up to 6,500 on the S&P, and then pull the rug out. That's what they do. And it's all mathematics. It's all computer program. Boom, boom, boom. If this happens, then this happens. If this happens, therefore this happens. Boom, 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 boom. So this month, your job, your responsibility is to protect your wealth. Take in historical events, historical returns of the S&P 500 down 55%, average return since 1928 of negative 1.2%. Take that into account, risk manage. You are born a winner. You choose to be a loser. When it comes to the stock market, you can win at this. You have the skills. You are learning those by joining us here at Best of US Investors, but you only choose to lose by being negligent, by ignoring what is happening in front of you. And that is, I am pounding this table because when I saw the report this morning on how gamma changed between positive to negative, and it's on the brink of going real negative, my fear is yesterday the market pulled back pretty nicely, nice little dojo there, kind of that would usually signal to me, oh, this is going to be a reversal day, and it may go up. But my bet is that it will go up to this trade trend line, the 15, and it'll pull back and it'll challenge 6,400 and then again 63.50. If it breaks there, we're going to intermediate. And then if it breaks that, we're going to 200. That all can transact this month. And take into account, why was this going to happen? Because all the big guys have spent their money. They have made tons. They leverage up. Some of these guys leverage up like 20 to 50 to 1. They've made a shit ton of money. they're going to take profits and they're looking for an opportunity to do so. We're back in the game. Vacation's over for a lot of these guys. They're back in the game. They're saddling up. They need to take profits. They need to free up money. They're going to free it up this month, and then they're going to go at it hardcore between October and the end of the year because they all get bonuses. Remember, these guys are living like 7, 8 figure lifestyles. They're going to make that money, and we're going to get into next year, and they're going to reset. That's when we start to look at credit. This is credit spreads. This is the thing that killed the housing market. So I'm watching this. We're down in lows. This is great. But this was 78.78 last week. This week it's 0.81. I'm keeping an eye. It's a variable. I'm keeping an eye on it. I'm unemotional. I'm watching this. I want to see a trend break. This would tell me the credit market is in trouble. And we could see something of that sort next year. But that's where we got to deal with what's in front of us now. And what's in front of us now is a volatility index, VIX, that is making some interesting moves. And you're seeing the market makers of the world hedging this out. They're protecting themselves. So do the same. Do the same. This month is September is shit show month historically. So don't get caught in the tide. Don't get pulled out and drowned. Just protect yourself. I believe in trailing stops. I believe in 7% trailing stops, 10% trailing stops at the most to protect my long-term, intermediate, long-term investments. And when it comes to short-term trading, like Mark does, I think you run 2% trailing stops on your stuff because what you want to prevent is massive downtrends and loss of time. What killed most people coming in over 55 years old after that big housing crisis was that their portfolios were down 30 to 50%. For most of those people, it took 4 to 5 years just to get to break even. My mission, my goal, our goal at Best of US Investors is to prevent that from happening to you all. I do not want to hear a story on a major pullback and people go, I'm down 20%. I don't want that. My mission is not to hear that. Instead, I want to hear I had the proper risk management process. I paid attention to the variables that were moving in the market and I protected myself. And we're okay. Now I'm positioning to profit from the rebound. And that's what April was. It was a rebound, a rebound. And if you took part in that, good for you. Now protect your assets. So that's my soapbox today. Sorry, I'm pumped up. I didn't get any sleep. Um,
Did you say protect your ass or protect your assets?
both.
Okay. Just checking. My ears aren't as
But
good as they used to be.
yeah, this is the thing about this is not to promote fear. This is not to get you scared. This is to inform you to pay attention. Look at historical values. Ask questions. Ask questions. Ask questions. Ask questions. Continuously. Be the Simon Sinek says that he's a motivational or speaker guy, whatever. He says, my goal in any situation is to be the dumbest guy in the room and always be raising my hand. Why is that? Why is that? Why is that? You do that, you will be a winner at this. Always question. Always question.
Or
All
So if
right,
you're the
let's open
dumb,
up the floor to
if you're the
questions and stuff.
if you're the dumbest one, then you're the smartest one, huh?
I would
Yeah.
let the
If you're the
charts do the
smartest one in the
talking.
room, you got a problem. What's that?
I would just say let the chart, we pay attention to these charts that guide us. Um, and it looked, we had September's are typically down, but you follow that chart on a specific stock that you hold, and then you just be cognizant of it. Not to me, it's kind of like business as usual. The charts tell me sell. I understand that there's a historic, piece that you're mentioning here, but the chart will tell us that, oh yeah, we're cranking. Like yesterday, we had a small little, change in the market. It's telling me it's shorting a warning flare, that there's going to be an issue. So just I
Well,
agree with you. You got to be mindful of that, historic, but the chart will tell us. right?
I mean,
No, well,
that's a one day. We don't make inferences about one day. And if you look at charts, and I don't disagree with you, Paul.
Mhm.
I'm a chart guy, so
Yeah.
anyway, but one day
I
does not
think
a
Paul,
trend make, like
here's
we
one thing
say.
to think about. Here's one thing to think about. Mark, you lived in California, right?
Yeah, twice.
80% of the time you thought everything was fine. It was the layers underneath when the earth started to move that you're probably completely unaware of. That when they moved, earthquake, that's when everybody got disrupted. And that's when things happened. That's when things broke apart. Stock market the same way. I'm at just in advocating. Look at the layers. Look at the layers below the surface. The charts say yes. There are layers below it that move the charts. Just keep that in mind. I don't disagree with you, Paul. It's just you got to go deeper.
I
And I
agree
think in
with you.
this environment, you got to go deeper.
I can't help but bring up your father in that, he tends to buy, at maybe lows or highs, and he has conviction in particular stocks. And,
Sure.
that's a message, you're buying fundamentally. You're buying because of the fundamentals. So I think we should, you don't want to be, like you said, don't let fear drive it. Just let, you want to keep your emotions definitely out because they're the biggest enemy when you're trading. So you got to walk away and, digest that chart and then come back and then have a exiting plan for every, like you said, put those stops in. I happen to put top stops in based on the chart, but you got to have some stops in, but you also don't want to say, oh, be anxious to sell because it's September.
Well, I
Some of
don't think
these,
so.
yeah, yeah,
I
yeah.
think we saw it yesterday. I mean, you can use yesterday as a good buy, too. I mean, I didn't get into everything, but there are some that pop down and you can get a buy. And once you get ahead, as you know, Paul, then you put those stops in and you have a profit. It might be a 2% profit, it might be a 0.2% profit, but it's a profit on a swing trade. And
Yeah,
you can use it.
I guess I'm getting a little like yesterday. I was irritated. I sold Meta, and I was like, "Oh man, Meta," and I was
Why
like,
did
"I
you do
gotta,"
that? Why did you
because
do
it
that?
hit a specific, level
Okay.
on my chart.
So why
But I'm
so
in Google, and I'm like, "That's pretty cool." Google's up. I'm in Amazon. I'm in all of them, but like, I'm like, I wish I was in Meta, but I'm saying, get your emotions out of there. You sold Meta because it did, it went against your
it
trading plan. Your
right. And
trading plan.
that's
Yeah,
it. You need a plan and a process. And you
yeah,
are exactly right. We've been preaching this. Get your mind out of it and you're gonna do
yeah,
much better.
yeah. I
Definitely.
think that's what I'm trying to say is that have your target have your exiting plan in place. You'll be fine,
But
and
yeah, it's
don't fall in love with a stock. Yeah, that's it.
well, and I think that you're right. And I think
Mm,
you know, charts are not 100% accurate. Okay. And they're backward looking. Okay. So
yes.
everything you look at, you're looking at moving averages. Well, where are moving averages? Well, the 200 day is taking the last 200 days, taking all the prices of those 200 days and add them up, divided by 200. Okay. Backwards. Look at the MACD. You look at the RSI. It's all taking data backwards. We're trying to infer about where the market or this stock is going to go on a chart based on looking backwards. And as you know, with this administration and what's going on in the world, a piece of news can come out and totally wipe your chart out. Your chart didn't know,
Yeah,
unless there's some insiders, and we've seen this on charts, but it starts buying. You're like, well, why is that going up or why is that going down? And then news hits and it either collapses down or collapses up, and then
yeah. You're talking about the insiders. Sorry to interrupt. You're
yeah,
talking about the people in the know. I'm actually
absolutely.
looking at this month to say, oh, like for instance, Berkshire. I actually accumulated based on the chart. Because I said, okay, Berkshire, really good company. I'm going to start accumulating. And I have no fears right now, based on what the charts or, I like Palantir. So when I see these dips, I'll buy a little bit because, overall it's holding up, you know, yeah, Berkshire, what's wrong with that? Keep on accumulating a
Well,
little bit, here and there,
It's a
well, I mean,
rotation. It's a
yeah, I
rotation
mean,
of risk.
we've seen it, and here's the 200, and we talked about two. And we've been watching Berkshire because I'm a big Berkshire shareholder.
yeah.
Okay, so again, we watched it come all the way down, and this is good discussion. Thanks, Paul. I'm glad you brought this up. Um, so I mean, we watched Berkshire. I mean, this was their meeting, their annual meeting. I went to it, and then Warren Buffett says I'm out at the end of the year, and then their earnings came out, and then just down, 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 down. We played the 200, got below the 200, said, you know, if you were an investor, you might have got out here. Okay, you got out. If you got out in July 2nd, and you might have got back in. If you're an investor on the 200, you got back in on April 20th or August 20th, you know, and you've played along this 200, and now we're up. And we've been watching it, and that's why it's on the list. Because once it came and hit this 200 for an investment or a swing trade, that's a knowing, like Paul said, the chart is telling me that 200 simple moving average is like the standard on everyone's logarithm, on everyone's chart. You're always going to see the 200 on there. If you're above the 200, it tells me, and everybody in technical analysis in the world of trading knows, that means you're in a bullish move. If you're below the 200, you're in a bearish move. Okay, and so that's why we have an under the 200 list and a watch list over the 200, because you can play them both. You just have a different risk tolerance or a risk factor in there, like Paul was saying. You know, what's your risk factor? You know, and in Berkshire, you know, Berkshire's above the 200. It's also a swing trade, so it's both right now. And I believe, and I've told you guys this since I've been doing this for Kerry and Trent, that if I only had one stock to trade, I would trade Berkshire and invest in, because like you said, it's a good company, it has $386 billion in cash, which I believe it's losing in bonds right now because of inflation. But that being said, they still have that cash on the sidelines. Company's been around since 62, you know, and you can trade it and you can invest in it. And I do both. And it's just one of those that I like, you know. So again, charts, awesome. I love them. I don't even know what some of these companies do that I put on the list, because, you know, I'm just looking at the charts, like Paul said, you know, trade the charts. Kerry on the other side, Kerry's done deep dives, and you know, some of his stuff blows me away on, you know, how he uses AI and the stuff that he gets Samantha and Bart to come back in. I would like, you know, I listen to what Kerry says, and I like his charts. And I think what you use charts for is if you find something you like Kerry's, you know, use the charts to kind of get a better price to get in. And we've talked about this one that's on his tell list, TGTX. And I've been saying even last week, I said, look, this is on his tell sheet. It was playing up here along resistance, up and down, up and down. Is this where you want to buy it if you're going to even invest in it? Well, you know, I don't think so. And then we had the earnings, then it came out. Then we came all the way down to support. Went below support, came back up. We started this trend up. Okay. And I said last week, I said, if you're interested in tell, this might be the opportunity for you to get in. And you can see we've talked about it 4 days in a row, even during yesterday. This one has come up. Okay, is it going to go up all the time? Can I guarantee it's not going to come back to support? No. Okay, that's why you watch the oscillators. The oscillators are still telling me it's pretty positive, and I got sell orders right up here. So I know I'm safe up to the top. I know I'll probably come back down here. Here's my risk. Here's my reward. It's on the tell sheet. If I'm an investor, where would I rather get in? Here or here? You know? And again, we're under the 200. I would really like it to get above the 200 as an investor. But if you're more of a risky investor, of course, you know, you got support right here. So using both what Kerry talks about and what we talk about here, you know, you can make good decisions even on investments, in my opinion.
Excellent. Yeah, excellent. I'm in Iron because of Kerry, and you know, I know Dave's on here. He talks a lot. He's pretty knowledgeable on Iron. So yeah, that's an easy stock to be in because you see that it's well over the 200 and it's still chugging along. So, you know,
And I look at this,
yeah,
Paul, as you will
yeah.
know, as a trader, I'd say I'd get out right now because I'm up against resistance, you know. So I
Trying to
would
invest in this. I'm
well, if
staying
you're an
in.
investor, yeah,
Yeah,
look, you got the
yeah,
200. Look at this.
yeah.
This would have been a nice one.
Mm.
200. I'm just using 200 because it's easy. People can
Mhm.
understand it. On June 6th, you get in. It's at 975. It's still above the 200. Yesterday it closed at 29.11. $20 up. Pretty nice. Pretty nice run.
It's a beautiful run, and I think that's it sleeps a little bit. It's easier for me to own Iron given that Kerry did his research, and I chat with Dave a lot about it. He does research, so as a group, you know, we chat. So that's an easy stock to own,
So
just like Berkshire is an easy stock to own. So some verse like we pick like I'm in Cardinal Health too. I know what they do. They're big. They're okay company. To me, it's very low risk right now. there's not a lot of downside. So yes,
So
there are stocks.
I'm
Go ahead.
gonna ask you a
Go ahead.
question, Paul. I'm gonna
Go,
ask you a question.
go.
Let's say you got this was your cost base. You watched this go up, it went sideways, and maybe you got in right here when it started coming back up, because you looked. So now you're up. You're an
Yep.
investor. What if it comes back down here? You're gonna get out?
If I have a sell right now on this stock at about $24 in that neighborhood,
So you are right.
which is
You are right.
essentially right at earnings. So like if it drops below where, to me, earnings is, an unknown market condition where,
So
they did great in earnings. So to me, if it drops below that, then something's up pretty bad.
you're
Yeah.
actually a trader on Iran. You're not an investor.
Yeah, I guess so. If you want to say
Yeah.
that. Yeah.
And that's okay. That is okay. There's not, I mean, we talk trades and we talk investment on this channel. So that's, and people just want to know, because a lot of times we talk about where we get in and we don't talk about where we get out or the same. But again, and what Paul did was right, as far as I'm concerned. When you get into something, know when you want to get out of it too, you know, because getting in's easy. Getting out's the hard part in my experience. Because
Yeah.
if it keeps going up, your emotion kicks in, right? Paul, you're like, hey man, I'm not getting out of this ever. It's gonna go. Then it starts coming down a little bit, and you're like, well, if I can just get back up to this level, I'm gonna get out. And if it does, you never do get out. And if it keeps going down, you're like, well, now I'm 10% down. I'm gonna wait till I get even to get out. And there's your emotion. That's not a trading plan. That's not an investment plan. That is emotion, and you're gonna lose every single time on that. I would almost imagine.
And
Yeah, I
Mark,
agree.
you guys are bringing up Iran. Yesterday, I posted on the YouTube channel the comparison between Cyprus mining and Iran. And the
Right.
reason I did that was because what I when I found when we found Iran back around $7, we put it, Kerry put it out there, and the thing took off, over time. And so what I was looking for was companies that are similar in the similar sector and are yet they're behind. And so I did that deep dive. You can check it out on the Best of US Investors YouTube page. And it basically the numbers, the financial numbers all favor Iran. But one of the things that I was asking was, where was Iran 2 years ago in comparison to where Cypher mining is today? And they were similar. The biggest difference is that Iran holds no crypto, no Bitcoin. So they mine it, or they mined it and they sold it. And they sold it for expansion into their move into AI. Cyber, or CIFR, holds 1,219 Bitcoin in their treasury. So they mine it and they keep it. Now, they just recently are making that sort of step into the AI data center element, and they're trading today. They're going to open up. They closed yesterday at $8.32. They're going to open up at $8.83 today. They've had a pretty nice volume run. The volume has spiked pretty big in the last 2 days, so that's something to be cautious of. But when I look at this, I go, okay, will this company be at $15 by year's end? And I personally went and bought call contracts at January 16th, 15 calls. So they're way out of the money, and I spent $100 on them, right? So I was willing to say, okay, I'm willing to risk $100. But is this a company similar to Iran, but 2 years behind? And I think that's one of those things that I look at this and I go, is Iran, it's getting all this attention, whereas a year ago it got no attention. Now it's getting all this attention. Is this another company who's similar to Iran, but 2 years behind, that could have this conversion from Bitcoin mining to AI data center development and could have another run towards where Iran is today? And that to me is something of interest. Now, this is a speculative. This is, if you're looking at your risk spectrum, this is on that way out here on the risk spectrum, way up here in the corner on the risk spectrum. So take that into account. So you don't allocate your whole life to it. You don't allocate your whole 401k to it. You just take a little bit. If this is something you're interested in, do your due diligence, do the deep dive, check it out, and ask yourself why would this thing go up? Why could this be a candidate for to go higher? This is interesting to me. I think these are the kind of things I'm looking for right now is companies who are in that, hey, we've been doing this, we have the systems and the infrastructure for this, especially in AI development and AI data center development. Could they be making this switch? And I believe this is a company that could be making that switch and could, just money flow could be
This would have
easy,
been this would have
over
been a
10,
nice
$20.
this
Huh?
would have been a nice couple of swing trades here. You got above the 9, and you got
Yeah.
above the 200 here at the end of June. Came back down. We like these. Come back down. Look where it hit, right on the 200. I like it when it hits support on the 200. That's why I did a couple of those yesterday on the watch list, because the 200 is a strong level of either resistance here or
Yeah.
support here. And then it just took off. And what a nice another swing trade that would have been too.
Yeah. Well, and I
Uh,
look, you got the green line of death up there. I
right here.
anticipate this will pull back.
Yeah, I do too. These are some big moves right here.
Yeah. But go back towards what is that? Back towards where it peaked at on the first swing up. What is that? So July 22nd, so mid-July, that could become support. That line right across could be your support level. So that could be a entry level point. As long as it supports that support, hits that support level um and keeps it. That could be an entry. But my whole thesis behind it is that this could be one of those companies who could be mirroring what Iran has done. The vantage I like is that they're still holding crypto. They got 130 million, I guess, valued last night, about 130 million dollars in Bitcoin valuation. If Bitcoin makes a rip, all that does is increase their strength of their balance sheet, and they can leverage that by collateralizing it and borrowing to expand out their AI development as well. So, whereas Iran doesn't hold Bitcoin, so they don't have that asset um, to leverage against, to borrow against. So that was one of those differences I really liked about it.
If you look at this on 626 is when the volume popped up from about 25 million to 69 million, and it hasn't
That's
stopped.
insane.
You could see
Yeah.
that a lot of interest came into this stock on
Yeah.
626. Yeah.
Yeah. And the question is
Yeah.
why?
Well,
I think they
yeah.
introduced their a AI cloud platform, I think around that time, if I remember right. But check out that deep dive I put up on YouTube. I used the notebook LM to do it. So it's similar to what Kerry does. I just didn't name them Samantha and Bart. So
Okay,
uh,
good. Thank you. We appreciate that. Okay, I'm
I was
going to do a
trying to
couple
find a
stocks.
Texan. I was trying to find if you could change their accents to like a Southern kind of accent, sort of,
You
since
should be
I'm
able
down here
to,
in the South.
because I can do Australians and English accents on some of mine. Okay, I'm going to do a couple charts. Market opened, obviously. Here's CoreWeave. Someone asked. CoreWeave's down below the 9, right about where it opened yesterday. CoreWeave, it's interesting because we've come down. We've watching it. Doesn't have 200-day moving average because it hasn't been around long enough to have that. We've had this run up a little bit. And if you see, we keep moving out. Still within its kind of boundaries, but again, not looking at it yet for a buy. But this yellow line's interesting. And the reason that this yellow line is interesting is when you go back and look at CoreWeave. CoreWeave had this nice run up starting about in April. I mean, what a nice swing trade that would have been. So then it came back down and then it kind of bounced. So I'm looking at this line right here. So anyone that's in above this line here, okay, and then it kind of went back up, is now underwater, okay? unless they got out on this downtrend here. These people, for the most part, if you were in here and you're not trading, you're still in the money. So we're going to have to see it come back up and not only hit, above the 9, but I think we need to get above this level, which is actually the upper or the 20 on core weave. And then you're starting to see people come back in, I think, in core weave. But again, it's not quite there yet. We talked about yesterday, but watch it, keep it on your list. The other one, DCTH, Delcath Systems. First thing I look at is volume 445, 3, 2, 8. The volume is really low for a trade on this one. That's why you see some of these big old candles like this, because bid and ask. It's trading above the 9 right along support. You're going to have a resistance at 1141, which is right where the 50 is too. So again, I don't like it because of the volume. It's kind of under my 500 to 750,000. But again, you had a little bit of an upside. You're right above the 9 right now. Something that I wouldn't personally trade, but I don't know what they do. So you might want to look into it if you're thinking about that. But I know we've had a level of resistance here. Go back 6 months, take a look back. So we've been kind of at this level for a while. It's going to have to kind of pop by that. And then the 50 also to get some upward motion on this one. But again, I'm looking at it had good volumes at some point right back in these areas when it was selling off. But again, mostly, yeah, kind of lowish volume. But if you wanted to try it out, here's your reward up to the top. You're right on support. Your risk is down to the Bollinger Band like we hit down here. So, quite a bit on both sides. So that's all I got. Where market
Hey,
is
Mark,
open.
real quick,
Yeah.
Mark, real quick,
Yeah.
check out Soundhound, Soun. This came up on one of my screeners because of its clustering effect. It's a math fractal geometry thing, but I have it sit right at the my trade trend line. It's struggling there, but when I look at the RSI cross back over the 50, it's 56 now. The MACD hasn't crossed over yet, but it's something I'm just keeping an eye on. It looks like you got the green line of death there,
Yeah, it's sitting right
but
there.
yeah, if it can make a move above that, that may be an opportunity. So just a
Potentially, yeah.
watch list item.
Yep.
Yeah.
Whew. Wow, what a good day, guys. I mean, thanks for your
Yeah.
questions and all your comments. And that's what we're here
Hey,
for.
hey, Payman, you had your hand up earlier.
Oh, you're on mute, Payman. You're on mute.
Yeah,
There you
he's
I
go.
got it.
did, and the question I had was you were talking about how September's usually typically a bad month for stocks and prices come down. And I was wondering if you think that data center stocks such as um, Iron and similar ones, Cipher, might behave differently than the other stocks during September. Do you have any reason to think that it might behave differently, or you think the trend is going to be the same for all stocks?
No, I think there is a redistribution going on right now. If I showed yesterday sort of that comparison between the S&P 500 that we know of and then the equal rate S&P 500, and we're having this sort of a redistribution from a concentration into the Mag 7 towards the other 500, companies within the S&P 500. I think that process is happening. And I think you're also looking for valuations. Bitcoin has pulled back over the last month. So I think those companies like Iran, I do think Iran will pull back to a support level. But companies like NVIDIA and Microsoft and Google and a lot of these companies, they're very, very highly valued. They've had the majority of money coming into them. Um, and so I think there's just going to be a reevaluation of a lot of AI stocks over the next month or 2 months. It's going to present some great opportunities. The IRENs and ciphers, the small and mid cap companies, have not gotten a lot of love, and the different sectors other than technology. I think you're going to see a flow. We're seeing that with Berkshire. I mean, that's a mega company. So we're seeing that flow of money coming into them. So I'm looking at September as a redistribution of money, profit taking, opportunities being presented themselves. And I think that's where Cypher, I think Iran has had a run up. It will, in my opinion, pull back, but it's going to present an opportunity for, a Nvidia at 165 or 160. It's going to present an opportunity for the mega cap tech stocks to get them in at a better price. And then so just remember, this is a puzzle, and the puzzle pieces are always being shuffled. And when you get a clustering of pieces into like the center of the puzzle, but you don't have this, a lot of times those outside areas will get filled in at some point. And I think that's what
Okay.
we're going to see this month. But I do think that as we get into the third, fourth quarter, I think you're gonna like this. This thing's gonna get lit up, and we're gonna see S&P 7,000 plus. And what's going to drive it is the mega cap companies. But I do think you're going to be able to buy them at a lower price sometime this month. That's
Okay.
my opinion. It's not advice or recommendation, but like everybody has a belly button. Everybody has an opinion. So that's my thinking.
All
Hopefully it
right.
helps.
Thanks.
Yeah.
How do
All
you know
right.
everyone has a belly button?
Huh?
How do you know everybody has a belly button?
Well, unless you're an alien, I mean, it's just I mean, yeah, granted, there are probably aliens walking among us. One of them starts with an E and is the richest man in the world. But anyhow, um, uh,
Essentially.
um, all right. Well, we'll wrap it up there. We will see you tomorrow. I appreciate you all very much. I can't express that enough. I know Mark and Kerry as well. But I think about you guys all the time. I want you to be safe. I want you to make money. I want you to achieve your dreams and goals. And that's why I wake up every morning to do this, because I love the game, but I love seeing people have success. That's, it's about creating memories. And that's what this is about. So we'll end it there before I start. It's not Sentimental Saturday, but it's getting close. So, all right, we'll end it there, and we'll see you tomorrow. Um, and remember, if you're not a platinum member yet, we are filling that 1,000 group up. We want you to be a part of this. We want to create value and have a hyper focus on 1,000 people and help make 1,000 people make money and create wealth and achieve the green. So if you haven't upgraded and have questions, feel free to text me. You can get my phone number right off the website. And you can text me, give me a text, please. I'm very hesitant about answering phone calls. So text me and we'll make it happen for you. We'll go from there. Mark, any final words? You got anything else?
Nope, just be careful out there. This jobs week and Friday should be interesting. Jolt's out today, and I think Challenger Gray and Christmas tomorrow. So that just same as it ever was. Have a
Yeah.
plan, have a process.
Open.
You don't have to be in the market all the time if you're an investor. Why are you an investor, and why are you in those companies? You know what you're in. And be safe.
There you
Don't
go.
lose
All
don't lose
right.
money.
There you go. All right.
All
See
right.
y'all tomorrow. Have a great
Take
day.
care. Good
Live
night.
well.
Good.
Peace.
Thank you. Have a good day.
See
You
ya.
too.
Thank-
See ya.